Hi, everybody, and welcome back to your weekly update with the Money Coach Show, coming at you every Friday. So today we want to talk to you guys. Um, as usual, we'll do a market update. I'm here with my co-host, Robert Sierra, our mortgage expert, and also Damian Gutierrez, our financial guru. So thanks for joining again today, guys. We're going to come at you with our market update, and then we're going to do something mortgage educational. So today we're going to talk about what PITI is, what it stands for, and what it means in the mortgage world. And then at the end, of course, Damien's going to give you our financial guru tip of the week. So I'll get you guys started with talking about the market update. So as we all know, the Fed cut the rates 50 basis points on September 16th. Or some of you maybe don't know this yet, but this is not the same thing as mortgage rates, but it does impact the mortgage rates. So
Mhm.
because the lenders had already anticipated this rate drop from the Fed, they had already lowered the rates. So the refinance boom was already here. Honestly, the Fed cutting the rates just made it louder. So we went into what we call a red hot refinance market. Last week, the rates went up just a slight bit, 0.01%, from a 6.14 to a 6.15%, which doesn't sound like much, but it was just enough to take the heat off of the red hot refinance market. But refinance market is still here. Lots of people are still applying to refinance. Um, and 1 week ago, right. So last week it's 6.15, but 1 year ago, the same week as last week, the basis points were 139 points higher. So still record low interest rates going on right now. If you got in your mortgage above a 6%, like you're in the sevens or higher, it's a perfect time to refinance because we don't know what's going to happen to the rates in the future. Right now, we know that they're low. You could save hundreds on your monthly mortgage payment starting right now. You could tap into your equity to pay for the closing costs. So if you're in a higher interest rate, talk to your broker, your local broker, that's us, and see if you can get those monthly payments reduced and take a little sweat off your back and save a little bit on those monthly payments. The Fed did say or imply that by the end of the year, they're going to drop the basis points another 50% and maybe another 50 basis points in 2025. Things could change, right? Like the market depends on economy, the industry, and several factors. So we don't know this for sure. So if you have a chance to save money, do it now. Otherwise, if you got in at the 6%, wait until next year. Hopefully, we're going to see the rates go down another full percentage point so we can save money for you guys as well. So that's it for the market update for you guys. And unless I missed anything, Robert, thank you, Damien. Robert, you want to take it away with educating our listeners about what PITI is and what it stands for?
Absolutely, Tara. And you know what? You did a wonderful job explaining exactly what our clients and, the broad audience needs to know, and hey, like you mentioned, last year, those interest rates were at a seven. Right now they're low. So like you said, if you can refinance now, or if you want to understand what a refinance is, contact us and we'll be able to make sure we can walk you through the steps. And much like I'm going to walk you through a PITI payment right now, it's crucial that you guys know this. We know this as loan officers, but you guys should know this. So most of the clients that we've spoken to think that the beginning of the purchase would start if you talk to a real estate agent. And we here at Loan and Key, hey, real estate agents, they're our partners, but we want to get a hold of you first so we can educate you on what you can actually afford. We want to make sure that you're not house poor. And, that's a term within inside the industry that says, hey, you can afford this house, but you can't afford money for, hey, that week date night or monthly date night, the savings that, our financial guru will be able to explain to you a little bit later about. We want to make sure that you can live comfortably in your home and be satisfied with what you're paying. So, we at Loan and Key, like I said, we want to speak to you first so we can go through what it is, what you're going to be able to afford. So, aside from that purchase agreement, come to us so we can actually show you what that PITI payment is. So, and we want to be able to walk you through the 1003. That's the IRLA. Mostly, with inside the industry, we call it, the 1003 IRLA. That's the Universal Register. Excuse me. It's the IRLA, the 1003. But when you fill that out, that'll be able to break down what your PITI payment's going to be. You're going to be sent out a loan estimate, but we here at Loan and Key will even create something for you that's going to be able to show you that before you actually have to sign all that information. That's going to be associated with your loan estimate. So that PITI payment that my colleague here, Tara, was explaining to you, that is going to be called your principal, interest, taxes, and insurance payment. So the principal proportion goes to reducing the balance of that loan that you've taken out. So that's going to be paid down monthly. The interest is obviously the interest. That's going to be the cost of borrowing the money. That's going to be paid to your lender, typically calculated as a percentage of that loan balance. So as you know, you're paying down that loan, that interest payment's going to be lower. You know, you're going to be paying most of it at the front end. Then later on at the back end of the loan, you're going to be paying most of that principal. Then we have your taxes. Okay, and taxes, that's going to be variant upon your state, county, city, or town, and also the property price. So, you know, so we want to make sure, or the property value, I should say, not the price, the value of your home. And taxes, I'm just going to say it, you're always going to be paying your taxes. Even if you own your home free and clear, you have to pay property taxes. That essentially goes towards your local community. So your schools, fire departments, police departments. And we want to make sure that they get funded as well, because, hey, you know what, those are our first responders and those are the educators to our young ones. As a father, I want to make sure that my teachers and my local government is being properly paid and money is being allocated correctly. Now we have homeowners insurance. And sometimes it's going to be mortgage insurance, you know, but we're going to focus on homeowners insurance. That's going to be, you know, part of that PITI payment. So this is pertaining to the property, you know, how much insurance that property is going to be, you know, valued at. So you're going to be able to make sure if something ever happens, your property is insured. So together, this is going to create your total PITI payment. And, you know, a lot of the times people, you know, on those high value loans, they're only interested in, you know, the principal and interest. You know, we at Loan and Key want to make sure you understand the full scope of your mortgage. So we want to be able to break down what that PITI payment is for you.
Hey,
And
Robert,
yeah,
so sorry, financial guru over here. I hate to interrupt you. Do you have any examples that maybe you could show some of our audience and everyone kind of what you're talking about? Because pity payment, it's a lot to understand. Their principal, their interest, their taxes, their insurance. Um, but could you talk us through maybe something like you have some charts, right? I know
oh,
you do.
absolutely,
Oh,
absolutely. I'm glad you alluded to that.
why don't you go ahead and why don't you go ahead and show us, please?
Sure, will do. Because you know what? And that's a great segue to be able to point out we at Loan and Key will build out a total cost analysis tailored to your needs and what your financial needs are. So we want to make sure that you have the full scope of what you're getting into. So you know what? Let me go ahead and pull that up for you real quick so you guys can see exactly what that is. So this right here is our total cost analysis. We can put together 4 different products as well as what you're currently buying right now or what you're currently renting, you know, so we can see what you can actually afford. And as Damien mentioned, we have what the loan amount's going to be. And as you can see, we have tons of tools. This one is the most vital. So we can say, hey, you know what, this is your loan amount. Obviously, we have that purchase price and down payment, but we have the loan amount with that interest payment that's going to show and reflect what your total payment's going to be. And you can see we can show you various interest rates depending on what your down payment's going to be. And then also we're going to be able to make sure that you have that total payment of what you're paying on that PITI payment. And then also this is a great tool and many people get that wow moment when we're able to show you more information that pertains to that principal and interest payment. As we have here, we can see, hey, you know what, for that 3% down, your principal and interest is going to be $3,372.08. And then we have that breakdown of what your property taxes are going to be, as well as hazard insurance. And then as I mentioned earlier, if you're not putting down 20% and you have to pay some type of mortgage insurance, we can even show you what that payment's going to be as well. So this will total out that PITI payment as well as your mortgage insurance payment. Now, again, there's, you know, that insurance payment with inside the PITI, that's going to be, hey, to secure the home. Mortgage insurance, you'll see on some of the short videos I've created on our YouTube page, it's basically saying, hey, you know what, that lender needs to have insurance that you're going to be able to pay the note back on time. And this is a great tool that we will show each and every one of you. And again, you don't have to sign a contract with us for us to show you this. We at Loan and Key want to educate you, the buyer, and you know, your largest financial purchase you're ever going to make. Because hey, I don't know about you, I'm not buying $200,000 cars all the time, ever really. I'm pretty modest and pretty conservative with what I buy. And again, I want to be able to show you exactly that fiscal responsibility that we here at Loan and Key all share. That's a commodity that is priceless, is being able to add value to what you're purchasing. So Damien, I hope that this shared a little bit more on what that is. And you know what, I take it back. Let me show you a little bit more. I'm going to show you what a basic uh, amortization schedule looks like, because that also is going to be on your loan estimate. And you know what? Let me go ahead and share my screen one more time, because again, this is vital to making sure you guys understand exactly what you're getting into, because it's super important. Most people don't know this. We're not educated this in school, but hey, you guys should know this. So this is what an amortization schedule looks like with inside the tools that we'll be able to show you. We'll be able to break down what your interest rate's going to be. As you can see, this is going to be a 6.2 interest rate. And again, this is just for marketing purposes. It will show your payment. It will break down that principal payment, that interest payment. As I said, you're going to be paying a lot of interest up front. A little bit's going to go towards principal. And then we have that total payment. And then one thing that's also great that, not too many people are very sound when it comes to understanding these amortization schedules. We're able to even show you, hey, if you weren't able to put down 20% and doing 3%, which is no big deal, you're getting in the game now. You're having skin in the game. You're building equity. But hey, you may need to pay mortgage insurance. No big deal. And if you have been paying mortgage insurance and you purchased last year at that 7% interest rate and you want to look into a refinance to a lower interest rate, it's huge, because you know what? You can, instead of waiting all the way down here, I'm going to scroll down to about close to 9 years, you're going to have to pay mortgage insurance, but then it drops off at automatically 78%. You know what? Sometimes some lenders and some servicers will say, hey, send us a note when your loan to value is at 80%. And then we can see if you're in good standings, if you made all your scheduled payments on time, if you're ahead on your payments on time. They will take that as gratitude and say, you know what, you're at 80% LTV. We'll take away this mortgage insurance. But standard protocol goes at 78% loan to value, your mortgage insurance will be taken away. And some people don't want to wait 8 years. Some people will say, hey, I have enough equity right now. I can use that equity and put it back into my home loan and buy down what I owe. So I'm in that less than 80% LTV and I won't have to pay mortgage insurance. And that's where we'll step in and educate you on this. So Damien, as the financial guru, I hope I illustrated that clearly enough for our viewers, because again, we here at Loan and Key, you know what, if I don't have the answers, I look at it, my doctor, my wife is a doctor, and you know what, that Hippocratic oath, we like to take that into our own account and saying, hey, when we know not, and that literally is said in the medical Hippocratic oath, we will ask, hey, Tara, you know what, I have a question on, on property taxes somewhere. She'll be able to get that information for me. Hey, Damien, I need to have a breakdown of a budgeting. He'll be able to get that for us. And you know what, with that being said, you know what, I want to be able to make sure we all are transparent with our information to you guys. So that's enough for me. You guys heard me enough talking.
Robert, that was great recap or an explanation on PITI. And guys, again, that just stands for principal, interest, taxes, and insurance. And at Loan and Key, as Robert showed you guys, we have a total cost analysis report where we're going to show you guys a breakdown of those payments. We also didn't tap into some of the charts and graphs that you can see that are going to help you compare different loan options. And that amortization schedule is going to help you watch your interest payments come down over time as the value of what you own in your home goes up, as you're paying towards that principal as well. Go ahead, Robert.
I'm so sorry. And something I want to be able to add to value, it's like if you want to make sure that you're not house poor and you're able to, secure a little bit more money on the side. And again, this is something that I do all the time with my mortgage. It's a principal reduction payment where we're adding a little bit more to our mortgage each month to pay down our loan to value, because that is huge. And you know what? that helps fit in within inside of my budgeting. And you know what? Within that, I'm so sorry to jump in, Tara, but I just wanted to add that because that's huge when we're able to apply that into that amortization schedule, so you guys can win.
Hey, Robert, no, that was a great tip. I'm glad that you mentioned that because that is true. That is something that we can help show you guys. Like, how much extra do you need to make towards your mortgage payment a month, which could just be a small amount, but that's going to add to your principal balance, not just the interest payments to the lender. And that's going to help you build up the equity in your home sooner and lower those interest payments because it's going to be based on the amount of loan amount you borrowed. You can lower those payments and save money in the long run. So that is an excellent point, Robert. And for those of you who have been in the game and owned your second or third home, you might see what we're talking about and how this would be valuable. And those of you that are new to the industry or new to buying a home or first time home buyer, it might seem daunting, but that's what we're here for. We're here to break it down and make it simple for you guys to understand. Um, so yeah, thanks again, Robert. That was a great example. Go ahead and take it away, Damien, with your financial guru tip.
No, thank you, T. So if you guys haven't been paying attention, Loan and Key, talk to your mortgage brokers. Like Robert said initially, don't go to a real estate agent. That is not who you need to be going to when you want to marry a home, not a mortgage rate. Marry a home. So with that said, today's is going to be pretty brief and pretty to the point. I'm sure, I would hope a lot of you out there have full-time jobs. And unfortunately, not every full-time job offers retirement and 401k, but a lot of companies do. Especially any Fortune 500 company, and most of the medium to large size companies within the United States tend to offer 401k. What is a 401k? It is an employer sponsored retirement program. If you want to know more about it, normally they give it to you in your orientation package or your employee handbook, because I know how much all of us love to read those. But if you didn't, like the rest of us, normally you can just go into your human resources department if you work at a normal sized company, medium sized company, even a small sized company. If you work at a large company, they may have a really large human resources company or human resources department where you need to ask to speak to somebody in benefits. Speak to those people in benefits or speak to your human resources representative if you work at a medium or small size company, and ask them, hey, does our company participate in a 401k program? Because not every company does. And if they do participate, you should find out if you're eligible. Normally, after 90 days of employment, you're considered an FTE, which is normally considered a full-time equivalent employee. Normally, people after 90 days, usually at most companies that I've been at, and a lot of associates and colleagues that I've been at, they usually make you wait a year. And it's usually a year you have to wait. But if you're with the company for a year, you're able to contribute. Now, there's a caveat to that. Because I've heard of some companies where after you finish 90 days, they will allow you to participate in a 401k company. So that was why I said there's a caveat there. It doesn't apply. It's not a general rule. Every company is different. And that's why I initially started out this segment where you need to talk to your human resources department. Because if you are not participating in the 401k program and your company offers it, well, you're wasting money if you're not participating. And honestly, I'm not trying to point the finger at anybody. What if you work at a job and you don't even know if your company offers that, or it's never been mentioned? You won't know where to start unless you actually just start to ask questions. And there really, I know it sounds so cliche, but there really is no such thing as a stupid question, especially when it comes to your retirement, okay? At all. So with that said, if you guys have been working for a company for at least 90 days or even a year, and you don't know if they offer a 401k, ask. What's the worst you're going to hear? We do not. But it's a possibility that they do and you're eligible. And what I would recommend is at least draw 6%, at least 6 to start. That's a normal rule of thumb to start out when you begin any kind of 401k account. But other than that, that's kind of my little segment for your financial guru tip for the day. And I just want everybody out there to know that small steps, little by little is how we all get there.
And Damien, if I'm not mistaken, a lot of companies that do offer 401k, they do matching sometimes. And how much is that up to?
Man, Robert, that depends. I've worked for companies and I've known people who've worked for companies that have done 1-for-1 matching. So that basically means, folks, that if you contribute $1 to your 401k, if they match you 100%, that means the company's going to give you $1. They say, we're only going to match you 50%. So that means if you contribute $1, the company is going to contribute 50 cents. Why is this important? And that's a good question, Robert. Why is this important? Most people get vested, and they call that VESTED. And it's not what you wear. It's what implies to when you've done 5 years at any company, folks. That means that whatever you put into your retirement, and then whatever the company promised you that the company was going to contribute to that retirement, you now have all of that to take with you if you decided to change jobs the following year, or let's say your wife gets promoted, or Tarah wins the lottery, and she's like, you know what? I've done 8 years with you guys. I'm going to take what I contributed and all of your contributions with me. Thank you very much. But that's essentially what it means. But great question, Robert. Absolutely great. And with that, we probably need to wrap this thing up. So I will get this back to T. And there is your financial guru tip. Sorry to be so long-winded, T.
Oh, wasn't long at all. Perfect financial guru tip, guys. The importance of 401ks. Don't miss out on that. Make sure you're contributing to it. It matters. One day you're going to thank yourself. So take care of your future self. And just to recap again, guys, PITI, whenever you get your loan estimate, that's what's going to show what makes up a mortgage payment. It is not just the mortgage and the interest payment. There's more to it. Property taxes can be hundreds of dollars. So you need to know that when you're looking for a home so that you can really know what your budget is and what you can afford. Come to a broker first so that we can get you pre-approved. And guys, that's going to give your realtor some ammo. Like when they're going to these different houses, they're going to tell the seller when you really like a house that you're serious about it, because you already spoke to a lender. You already got pre-approved. So guys, the first step is not to go to a realtor. It is to come to us so that you know what you can afford and you're educated about the home process. So yeah, great episode, guys. Thanks everybody for tuning in, and make sure to watch us next week. We're going to come back with more tips and information and a market update as well. So have a great weekend, everybody. Thank you.
Take care.
Bye.